I'm Owen Bigland. This is the Inside Edge video blog. Okay, happy Saturday. I'm going to spend this Saturday and the next Saturday down the road here answering some viewer questions on my blog here, because I get tons of them. You guys know I get 50, 60 comments in some of these videos. I had one guy, of course, the other day. I hadn't been responding very much on my YouTube channel here, and the guy said, Owen must be traveling in a 5-star hotel because he's not answering a lot of his comments here. And he's right. It's summertime, and I have been traveling and staying in 5-star hotels. He's absolutely right. I'm not going to deny it. I just got back. I was in Los Angeles a couple weeks ago, staying at the Ritz-Carlton in Marina del Rey. I was in New York for a week, staying at the Edition in Madison Park, which is a super nice hotel if you guys ever want to treat yourself. The Edition, there's 2 of them in Manhattan. I've been in Miami, staying at the Ritz-Carlton, Las Vegas, staying at the Encore. So yeah, I've been busy. This is what I do. I mean, I work hard and I play hard. I like to, when I work, I put 100% focus into it, and I'm working long hours, 10, 11-hour days often. And I work 6 days a week, sometimes 7 days a week for weeks on a time without a day off. But I also, if I told you guys, I take regular breaks, especially in the summertime. I like to go away. I probably take at least 6 weeks off a year. And when I travel, I like to travel in style. So does my wife. And that's what life is all about. You work hard and then treat yourself. You guys should do the same. But let's answer a few questions here in my mailbox here. Had a guy, this is what I call the grass is always greener on the other side. And I have heard this type of stuff since I've been in real estate. For the last 20, 25 years, there's always, it never ends. I get 10 of these a year. But a guy said, hey, Owen, why would I ever spend $1 million to buy a box in the sky in Vancouver when I can buy a 16-plex in Florida? So 16-plex in Florida. So I got back to this guy. He got my attention with this. So listen, I know the South Florida market very well. I'm down there. I have a good friend, high producing realtor who works in the South Beach, Brickell, Fort Lauderdale area, mostly luxury condos and detached homes. So I know that market quite well. I talk to him all the time. We exchange notes on where the market's at. So I got back to him because he piqued my interest. I said, well, first off, if you have to ask me that, then you probably haven't done your research on Florida. I know the Florida market, at least South Florida. A 16-plex, where is this 16-plex? And they always talk about these 12-unit apartment buildings or 16-unit apartment buildings you can buy for $1 million, $1.2 million, whatever. First off, I don't think they exist. They definitely don't exist anywhere in a major city in Florida. This has got to be in the swamps somewhere, in some backwater hick town in Central Florida, but I don't even think that exists. So he piqued my interest. Where is this? He still hasn't gotten back to me. They never do. Once you question him on, have you really done the research on this 16-plex? So I asked him, where is it? Because I don't think it exists unless it's in the swamp somewhere. But have you done your research on this? Have you looked at, first off, first, I don't think it exists, but if it did, have you had a look at the type of tenant that's going to be renting one of these type of units? Have you looked at the credit scores of these people? I mean, who's going to manage this property? And if they do, I hope they're armed, because it's going to be a lot of work getting the rent out of these guys. The credit scores are going to be the lowest of the low. The other thing I asked them to look into, have you looked into the tax situation? What are the taxes on a small apartment building? Remember, I've talked about this before. In Florida, they do not have state income tax, which is great. If you're working there, it's an advantage. You only pay federal. But where they get you, of course, is on the property taxes. The property taxes are 5-fold what they are in Vancouver. A $1 million condo here in Vancouver would be about $4,000 a year, Vancouver property tax. In Florida, it would be about $20,000, maybe more. So something like this is a huge property tax situation. The other thing, of course, have you looked at the insurance situation going on in Florida right now? Cover of the Wall Street Journal, and talking to my friend down there, these insurance companies are getting out of South Florida because of all the hazards there. Hurricanes, and then of course you had that collapsed building in South Beach. The insurance on these buildings has skyrocketed. Huge. You think we had a problem with insurance in Vancouver here 3 years ago? You should see Florida. But I also asked them, have you looked into investing in real estate in the States and looked at your tax liabilities on that as a non-resident? If you're a Canadian citizen, you can buy property down in Florida or California and rent it out. But you keep in mind, talk to your accountant. You're going to have to file 2 tax returns. You're going to pay tax in the US and in Canada. You're going to have a holdback on the rental income from the US. So dig into it. Also have a look at the financing requirements from a non-resident and the rates you're going to be paying, etc. So it's one of those grass is always greener that I hear all the time. This 16-plex doesn't exist, so good luck with it. But I always like to, I'm waiting for someone to please, if you are investing down in Arizona and Palm Springs, share your story. Because I know I have some clients that own in Arizona, Palm Springs. They don't own investment homes though. They own second homes down there, and that's fine if you're using it a lot. My philosophy on that, just off topic here, I've looked into buying, I've got family in California, and I've looked into maybe buying a property down in Southern California, and I've kicked the tires on stuff. Maybe one of these days I might when I'm fully retired, but for the most part, let's say I'm dropping $1 million on a 2-bedroom condo down in Southern California. I could take that $1 million, put it in the stock market, earn a 4% yield on it, so I could earn $40,000 effortlessly, just passive income. That $40,000 is going to buy me a lot of nice vacation time. That's going to buy me a lot of nights at the Four Seasons and the Ritz-Carlton, and I can travel and move around. I don't have to keep going to the same place, but that's just me. Maybe when I get into my 70s and I want to really take it easy and I want to buy a place I can call home, maybe I buy a place in Arizona or Palm Springs. Who knows? But for right now, I like the variety. I like to travel. I like to move around. I love Hawaii, the Hawaiian Islands. I've been to all of them. I'm going back there in September. I love New York. I love being in Southern California. Europe I go to. So I like the variety. I'll put that $1 million in a bank and collect $40,000 or $45,000 a year just in dividend income. Couple of quick questions. Another guy was asking me, let's see, about EV charging stalls in strata. It's a hot thing right now. It's the way of the future here. Most strata now are installing the infrastructure, at least, and putting electrical outlets in all the parking spaces. If the strata hasn't, it's probably on the docket and it's coming down the road. I know in my strata we're looking at getting this done pretty soon. I know up until recently, BC Hydro had a pretty attractive rebate on this, where it might cost you $90,000 to put the infrastructure in, but BC Hydro would rebate you back $40,000 or $50,000 of that. But I think it's the way of the future. I think I'm probably driving my last ICE car, combustible gas-powered car. In another 5 or 6 years, I think EVs are going to be the way to go, and I think it's a big advantage to have the infrastructure already in place if in a strata. If not, look in the minutes. You want to hopefully see that they're talking about it and at least are looking into getting it done in the near future. But it's the way of the future for sure. And I would say probably right now, I don't know, 35% of the strata downtown have it in place. The infrastructure now that you could just add a charger for about $2,000. The outlet is there. I would say at least another 25% of the strata downtown have got it on the docket to get it done pretty soon in the next year or so. A couple other things here. I had another real email here. Owen, I'm a big fan of your videos. Want to get your opinion on my case. I bought a 1-bedroom in New Westminster in Sapperton. Variable closed 5-year prime rate minus 7%. The difference I'm paying in the tenant living there is around $800 Canadian. I'm in it for the long term, but with all these rate increases, he's getting worried where we're going with these. Should I lock in a fixed rate? So in other words, he's on a variable rate. It's been going up steady. He's getting worried. He's having to supplement, of course, more of the tenant's rent to keep it going. Well, I've been in this situation many times over the last 30 years on my rental properties. Interest rates go up and they go down. In the early years, you're pretty much always supplementing your tenant's rent to make things come together, including all your property taxes, maintenance fees, and everything else. I would just tell this guy, hold the line here. You're an investor. You're not a speculator. You're going to have to ride this out. I would say, 2 years ago, I would say there's nowhere to go but up with interest rates. At least now, I think the worst is over. Most of it is anyways. And I think rates are going to start to come down maybe next year or towards the end of 2024. But I'm not certain. But this is what investors sign up for. I mean, I've got mortgages on, and I've got several variable rate mortgages, and I'm in the same boat. The costs are going up. Now, they're small mortgages, but I've had this situation happen, 15, 20 years ago on some of my earlier investments where I'm having to supplement or kick in more money every month. But if you're an investor, you should have budgeted for that. Again, I've been blogging for years on my blog here that, remember, enjoy these low interest rates, but they've only got one way to go, and that's up. Now they're up. At least now I think we're going to have a tailwind here moving forward. So my advice to you is just hold the line here. I know it's tough. You're going to have to put in a little bit more money every month, but keep the property. If it's a good home, it sounds like he's got a good condo there. Hang on to it. Rates will eventually come down. Selling the unit now, you're going to have commissions and everything else. Investors stick it out through thick and thin, and when they buy, they keep a buffer. How many blogs have I done on that? It's been an incredible ride here the last 3 or 4 years up until last year for interest rates. It's been an investor's dreamland. But it always comes to an end. We still are at relatively low interest rates. I know for you young guys like this guy, 6% doesn't sound too good, but it's still far less than what I was paying back, 15, 20 years ago. So stick it out, do the best to hang on to it. I think sunnier skies are coming. The other thing is, I don't know how long his tenant has been in there, but, rental rates have really spiked up here. So when your tenant does leave, you should hopefully be able to recoup some of that in the new rent prices there. So final thing I'll just say, I had some people, and I ran into a guy on the street. I run into more and more people at the grocery store who follow my blog and have been subscribing to me for a long time, and they're very complimentary, and thank you. It's great to meet people, and it's amazing how my blog has grown over the years. But I've had a few people sometimes tell me, including a couple of guys on my comment section, that maybe I'm a little too rough. I'm a little too tough on people. It's tough out there to make ends meet. And I agree. Listen, it is tough out there. We are living in challenging times here. Inflation is running hot. The middle class has been shrinking. Getting good, high-paying jobs is getting tough, although, as I often say here, the opportunities are far greater than what they were when I was starting out. But, I try and actually, I think I keep it to a pretty tame narrative here. I could probably give you guys a lot tougher love, because life is not easy here. You really have to work for things. It never came easy for me. I know a lot of people think it is. I started buying real estate 30 years ago and it was a breeze. It wasn't. Interest rates were far higher than they were today. It was still tough to get a mortgage, and I did not have the opportunities to make passive income like I have today, especially in areas like the stock market. I told you guys, I used to get completely ripped off investing in the stock market. Now it's incredible. But life is tough out there. I mean, I've always grown up with some pretty tough mentors. And so maybe, it's reflective of that. They've told me that nobody's going to save you. Your 9-to-5 job doesn't care about you. The government isn't going to help you. Nobody is going to help you. You're looking at that person in the mirror every day. So you've got to make things work, and you've got to be a little bit tough on yourself. You've got to have the discipline. You've got to make the sacrifices to get ahead. If anything, I think I could probably be tougher. I'll try not to be, but it's tough out there in this world. There's no free rides, and I try and mix it with a little, really I call it kind of tough love. don't want to be too aggressive and too, hard on people, because I know it's tough. But at the same time, it's not going to be easy, and you've really got to make the sacrifices and have the discipline, especially on my Saturday blogs. I'm Owen Bigland. As always, thanks for watching. I'll see you guys next week.